Good afternoon. I'm Alan Sykes with the CPA firm of Sykes and Company PA. We also have with us today Scott Sykes, a shareholder in with Sykes and Company, and also Jeff Baird with Brown and Fortunato PC from Amarillo, Texas. Today we're going to be talking about the buying and selling pharmacy opportunities, issues, and matters, etc. And we also would encourage you to enter in your questions. I think, Scotty, you, as the organizer, have the ability to see those questions and can monitor those questions as we go along. But we have a number of people on the call today, and this is our first attempt at having Jeff with us as one of our legal healthcare specialists that we work with on an ongoing, continuous basis. And Jeff, it's great that you joined us today, and we appreciate you being on the call.
You bet, and it's a pleasure for me to be on it. I mean, to the folks out there, this is going to be the highlight of your week because you do get to listen to an attorney, and all I can say is that it gets no better than that. All kidding aside, our law firm, we have a large national healthcare practice in the pharmacy space. We've been working with Alan and Scotty and their team for years. They are the best, and so this is going to be a lot of fun to tag team and visit with all of you.
Absolutely. And just real quickly, for those that don't know Sykes and Company, we work with pharmacies only, independent retail pharmacies all over the country. I think we have pharmacies in some 45 states currently. We're some 45 people, and we provide cloud-based accounting services, tax mitigation, and tax compliance services. So with that said, Scotty, you want to maybe start the conversation?
Sure. So, Jeff, pleasure to have you on our Master of the Margin series here. Jeff is the best in the field at what he does, so we're delighted to have you on today. So today we're going to be talking about buying and selling pharmacies, some of the things you need to be looking out for, just some of the key things that you can take away if you're buying or selling a pharmacy. So one of the first things, and generally there's two methods to purchase a pharmacy, and that's either you purchase the assets or you purchase the stock. Those are the two general methods of purchasing a pharmacy. So when you are looking at a pharmacy or you're looking to sell, generally you've got two options, and that's either you're going to sell assets of your pharmacy or you're going to buy assets of a pharmacy, or you're just going to go ahead and sell stock of the pharmacy, or you're going to buy the stock of a pharmacy. And we're going to go into the details of each of those, but just for introduction purposes, we're talking about two methods here of purchasing a pharmacy. I always want to make that clear as we get going.
And I think also in this discussion, Jeff, we always get the calls that from somebody who says, "Well, I'm buying the pharmacy." And they go through the process of saying, well, we agreed to a price, or we're doing this, we're doing that. But I have to back them up and say, what is it exactly that you're buying? Are you buying the assets, or are you buying the common stock? And they say, well, I don't know, and that's not a discussion we've had. And I know you run into this quite frequently as well, do you not?
Yeah, and let me talk about that for just a second. Let's say that Jeff Baird owns Jeff's Pharmacy, Inc. I'm the sole stockholder. I have a piece of paper that shows that I own 1,000 shares in Jeff's Pharmacy, Inc. With an asset sale, the seller is my corporation, Jeff's Pharmacy, Inc. It's an it. It's going to sell its stuff. It's inventory, it's non-inventory assets, it's OTC stuff, and it's going to transfer its patient files over to the buyer. So it is going to be the seller. On the other hand, if we're going to engage in a stock sale, then the seller is going to be me individually. And all I'm going to sell is going to be a piece of paper, and that's going to be my stock certificate. I'm going to hand that stock certificate over to the buyer, and I'm going to say, here you go. You now are the proud owner of Jeff's Pharmacy, Inc., lock, stock, and barrel as an ongoing concern. So if you can just keep that picture in mind, Alan and Scotty, then that might help the folks understand the difference between an asset sale and a stock sale.
Absolutely.
So Jeff, How about you start us off and talk about
Sure.
what a purchaser is looking for um, when
Okay.
looking for a pharmacy?
Okay. Sure. Now, in the kind of as a kind of a lead into this, understand. So now let's assume that I, Jeff Baird, I have set up a brand new corporation called Jeff's Pharmacy Inc. Jeff's Pharmacy Inc. has nothing. It's just a shell corporation right now. Now, let's say that I want to purchase the assets from Scotty's Pharmacy Inc. I want to purchase all of Scotty's stuff. The first thing to keep in mind is that my corporation, I'm not taking on any liabilities from Scotty's Pharmacy Inc. unless I want to. But as a general rule, in an asset purchase, whatever skeletons that Scotty's Pharmacy Inc. has in its closet, that's not my problem. I'm not taking those on. On the other hand, if I'm engaging in a stock purchase, such that Jeff's Pharmacy Inc. buys the stock of Scotty's Pharmacy Inc., such that Scotty's Pharmacy Inc. is now a subsidiary corporation of my company, then I've inherited Scotty's Pharmacy Inc. lock, stock, and barrel. Now, Scotty's Pharmacy Inc.'s liabilities normally will not flow upstream to rest on the shoulders of either my holding company or me personally, but in a stock purchase, I inherit whatever Scotty's has, lock, stock, and barrel. So keep that dichotomy in mind. Now, as a purchaser, from a business standpoint, and Scotty and Alan have better business acumen than I do. I'm just your typical egg-headed attorney. But the question is product mix. The pharmacy that I'm buying, is it a one trick pony? Is it just doing pain meds? Is it just doing, I don't know, is it just doing respiratory? Or does the selling pharmacy have a broad product mix? Normally, what you want to see is a broad product mix. Number two, the pharmacy that I'm buying, let's say I'm whether it's an asset purchase or a stock purchase. Let's just assume right now that it's a stock purchase. I'm purchasing the stock of Scotty's Pharmacy Inc. Well, does Scotty's Pharmacy Inc. have a valid pharmacy license? Does it have a valid DEA permit? Does it have an NPI? Does Scotty's Pharmacy Inc. Does it have a Medicaid provider number? If it sells DME, does it have a Medicare Part B supplier number? And the reason I want to know all of that is because if I'm buying the stock, if I'm inheriting Scotty's Corporation lock, stock, and barrel, I want to make sure all those are in place. Now, if on the other hand this is an asset purchase, not so much. I'm not as concerned because normally these licenses and numbers and permits um, they don't transfer with an asset purchase and so I've just got to go get my own. Pay your mix. Um, that's as important as a product mix. Again, is Scotty's Pharmacy Inc. A one trick pony? Is 90% of its business, does it come from CVS Caremark? Or did 9% of its business come from Catamaran? Or did 9% of its business come from TRICARE? Or instead, is the pay or mix from multiple PBMs, multiple commercial insurance companies, cash payments, other types of payors? You want that diversity. You don't want to be dependent on any particular payor. Medicaid issues. Now, we all know Medicare is for it's for old people. Medicaid is for poor people. And so, in order for if I'm if Jeff's Pharmacy Inc. is buying the assets of Scotty's Pharmacy Inc., then I've got to go out and get my own Medicaid provider number. And if I want to bill some Medicaid managed care contracts, I've got to go get my own contracts. On the other hand, if I'm engaging in a stock purchase, that is, I'm buying Scotty's stock certificate, um, then I want to make sure that Scotty's Pharmacy Inc. has the Medicaid provider number and it has Medicaid managed care contracts. This next one, the fifth bullet, is really important. I want to know, but either with an asset or a stock purchase, how Scotty's Pharmacy Inc. gets its business. In other words, um, is Scotty's Pharmacy Inc. dependent only on Dr. Johnson, and that's it, nobody else? Well, that's scary. On the other hand, if Scotty's Pharmacy Inc. is getting referrals from 20 different doctors and 3 different hospitals and a bunch of nursing homes, then that gives me diversity, and all of my eggs are not in one basket. That makes me feel better. But then the question becomes, well, why are these doctors referring to Scotty's Pharmacy Inc.? Is it because Scotty's Pharmacy Inc. is really good? Or is it because Scotty's Pharmacy Inc. is paying money to the doctors or giving something of value to the doctors that might end up resulting in a violation of the federal anti-kickback statute or the federal Stark physician self-referral statute? And so if I'm taking over Scotty's Pharmacy operation, whether it's a stock purchase or an asset purchase, I want to make sure that future referrals are coming to me the right way, because if Scotty's been paying money to these folks, then I come in and I say, I'm not going to do that anymore, and all of a sudden these doctors go away, then all of a sudden I have no business. And then lastly, documentation, patient files. How good are the patient files for Scotty's Pharmacy Inc.? Because if I'm going to continue to bill third-party payors under those files, I want to make sure that they're good. So those are some of the key elements that I look at as a purchaser. So Scotty and Alan, your thoughts?
I just want to make it clear with the audience here that, as you can see with everything Jeff covered, you can see why it's so important to understand if you're buying the assets or if you're buying the stock, because everything Jeff just covered there, it depends on how you navigate that issue or that bullet point. It's going to depend on whether you're buying the assets or the stock. And again, we all often hear where, well, I'm buying this pharmacy when folks come talk to us, and then we again always say, well, what are you buying? And you can see why, and you'll see that throughout this presentation, that all these things we're talking about depends on what you're buying. So just want to reiterate that point.
That's the point. And
Yeah,
go ahead, Alan. I'm sorry.
I was going to say is also, I think it's critical that when buyers and sellers are talking to each other, even early on, that the sooner you get professional help before you start making decisions or reaching agreements, the better off you're going to be, either from a buying or selling perspective, because so often they come to us and certain decisions have already been made or prices have been established, and there's just so many questions that remain to be answered. So I would caution those listening to this webinar not to go too far without soliciting professional help from those that do these kinds of things on a regular and continuous basis to help you.
And we get it that sounds self-serving. Hire a healthcare lawyer, hire a CPA firm that specializes in representing pharmacies. We understand that it's self-serving. But, I'm a walking, talking malpractice case when it comes to estate planning or divorces. I don't know what I'm doing, but I'm pretty good at healthcare. And so a lot of the stuff that Scotty and Alan and I are talking to you about, most attorneys and most accountants just would not know about because they don't practice. They don't work in this space. Let me touch on something that Scotty said, and that is, let's say that if I, Jeff Baird, I want to buy Scotty's Pharmacy Inc., and let's say that the real reason I really want Scotty's Pharmacy Inc. is that his pharmacy's got some third-party payor contracts that are really valuable and really hard to come by, and I really want those contracts. Well, if I do an asset purchase and I just buy the stuff from Scotty's Pharmacy, Scotty's Pharmacy is not going to be able to assign or transfer those contracts over to my corporation. I've got to go out and talk with all those third-party payors and say, will you please enter into a new contract with me? They may or may not. And so if a big reason behind my wanting to purchase Scotty's Pharmacy Inc. is to get my hands on those contracts, and I do an asset purchase and I don't get my hands on those contracts, we got a problem. And so that might drive me then to instead engage in a stock purchase in which I inherit Scotty's corporation, lock, stock, and barrel, including all of those third-party contracts. Having said that, you just have to understand that for most, if not all, third-party contracts, you have to let them know, usually in advance, that there's going to be a new sheriff in town, there's going to be a new shareholder. So
And that's pretty common. That's pretty common, Jeff, in areas with like DEA heat zones, such as Florida and that kind of thing, when it can take several years to get your licenses and everything like that. Rather, pharmacies or buyers looking to purchase a pharmacy will look to purchase the stock so they can get all those contracts right then and there.
And one other thing, stock purchases don't scare me. I mean, it used to be back in the old days where 90% of the transactions we handled as attorneys were asset purchases. Well, now it's 50-50. A stock purchase is just fine. That doesn't scare me. We just have to make sure during our due diligence phase that we know what we're getting. You know, you don't buy, before you buy a house, you get the inspector to come out and check for termites and foundation damage. Well, likewise, before we buy a pharmacy, we go out and kick the tires and make sure we know what we're getting. Well, our due diligence with an asset purchase, sometimes we can get by with being somewhat loosey-goosey because you're not inheriting the liabilities. But with a stock purchase, we have to be really pristine in terms of our due diligence because we take that corporation lock, stock, and barrel. That doesn't bother me. In fact, I'm even okay with inheriting a few skeletons as long as I know what those skeletons are in advance.
Mm-hmm.
Also, there's some tremendous potential tax benefits too with buying the common stock of an entity. We'll hopefully have time to talk about a little bit here at the end. But just be aware that if you're buying common stock, there are certain ways to do it correctly and certain ways to do that incorrectly from a tax perspective.
Very good. On this next slide, Scotty and Alan, I'll pick up about what a purchaser looks for, but two of these bullet points, the third one, the last one, that's more your bailiwick than mine. I've already talked about licensure, permits, and numbers. With an asset purchase, we got to go get our own. But having said that, even with an asset purchase, in most states, we will be able to operate under the seller's pharmacy license until we get our own. We do that pursuant to a power of attorney. So during the due diligence phase, let's make sure that we know that the selling pharmacy has a valid pharmacy license. Litigations or audits. Again, asset versus stock. With an asset purchase, as a general rule, we are not inheriting any lawsuits. We're not inheriting any audits. All we're doing is buying stuff. That's the general rule. Having said that, there are always exceptions, and we always want to know if there are any lawsuits out there or threatened lawsuits or audits. With a stock purchase, because I'm inheriting Scotty's Pharmacy Inc., lock, stock, and barrel, we just have to see if there's anything out there, because once I buy Scotty's Pharmacy Inc., then I've got to deal with the lawsuits and audits. I'll skip over to the fourth bullet and then handle the fifth bullet, then turn it back over to you, Scotty and Alan. On the fourth bullet, just be aware that as a pharmacy, we cannot pay commissions or any type of production-based compensation to a 1099 independent contractor who is hustling business for us. If we do that, like that might be a 1099 marketing rep or a marketing company. If we're paying production-based compensation to a 1099 that's bringing us business, we've got a kickback problem. Can't do that. We can certainly pay commissions to W-2 employees. And so that's another thing we have to look at when we're buying a pharmacy, and that is, how does it get its business? Is it through W-2 employees or 1099 independent contractors? Legal issues, I've pretty much covered those already, but there's always, you want to ask, to go through the kickback issues, the Stark issues, but we want to ask, are there any Department of Justice or FDA issues out there? Is there anything out there that's going to come back to bite us after we buy the pharmacy? So that's what I've got on this page, Scotty. And Alan, you might want to talk about the third.
Yeah, from a financial issue perspective, usually the purchaser is giving tax returns and financial statements. whether they come from the actual seller themselves or whether they come from a broker. We would caution you dramatically not to use those in making your due diligence decisions. And that may sound a little funny to you, but what we want to do is to get hold of the accounting books and records. For example, if you're using QuickBooks, we get the full backup version of the QuickBooks file. We do a deep dive down into the actual accounting records for a number of years to see the trends, to see the details of what's taking place in the background of that pharmacy. Then and only then would you be able to get a true understanding of what's taking place from the financial aspects of the pharmacy, and also compare those back against the tax returns that have been filed. Because frankly, in about half the cases, the tax returns we see from pharmacies are incorrect for one reason or another. But again, you do not want to be making your decisions based on given the financial statements that you receive from the seller or the representatives for those tax returns without doing that due diligence. And then that last little item there, understanding the day-to-day operations. If you don't understand the intricacies of how that particular pharmacy is operated, if you've never worked in it, if nobody in your group of folks that are purchasing either the assets or the stocks of the business don't have a feeling for how that operation is running, you need to get some experience. Even if you just work there for a weekend or 2 or 3 days, you need to understand who the people are, how the processes work, what the intricacies of that particular pharmacy are on a day-to-day type of basis. Any information you can receive like that will be advantageous in the process.
That's right. You can't assume the financial statements or the tax returns you get are correct. You just can't assume that. So you do need to be doing that deep dive into those, the balance sheet, the P&L, what's behind those numbers, how those numbers getting on the where they are. Do they make sense? Compare it to audit logs, compare it to other information from the script system. So a deep dive should certainly take place with the financial issues when you get to that point.
Okay.
So we can go to the next slide here. Okay.
Okay. I think the first bullet is, I think you guys can handle. Yeah, you got this. This is your thing.
Yeah. So, of course, we've been talking about asset and stock purchase, but digging a little deeper here in the asset purchase. So, essentially, any tax structure, any entity tax structure can participate in an asset purchase. So a sole proprietor can sell its assets, an S corporation can sell its assets, a partnership or even a C corporation can sell its assets, and the buyer can purchase those said assets. And typically the assets that are being purchased, again, we're not purchasing the entire business. We're just going in and saying, hey, I want to purchase your inventory, furniture and fixtures, goodwill, script value, and potentially sometimes real estate's also included in that. Those are the typical assets that you will see purchased with a typical pharmacy deal. Of course, one of the tax advantages here of purchasing assets is that when you are purchasing, say, the inventory, you're going to have a value on that inventory that you purchased. You're going to have a value on that on those furniture, fixtures, and equipment that you purchase. So say there's a robot in the pharmacy and you pay $100,000 for that robot. You're going to be able to depreciate or expense that robot usually in year one, in the year you opened the pharmacy or the year you purchased the pharmacy. So when we're talking about cash flow in pharmacy, when we're talking about planning with cash flow in a pharmacy, you know, how you structure this asset purchase from a tax standpoint is going to be very important to you, because if you're able to write off, say, that $100,000 piece of equipment in year one, or even in over a few number of years, because you can be very flexible in how you do that, you know, that's going to offset any income and hopefully any tax liabilities you may have, which is going to obviously increase your cash flow at the pharmacy, which is going to be so important to you as a new pharmacy owner opening your doors. And the same goes with goodwill, script value. You're going to be able to amortize that over 15 years. So if you are looking to purchase a pharmacy, wouldn't you want to add more value to the furniture, fixtures, and equipment and write off as much of that as you can in, say, year 1 or 2 or 3? With the goodwill, that's written off over a 15-year spread. So 15 years versus 1 year, cost recovery is a big difference. So there's some negotiation tactics you can use here when purchasing assets that you should be aware of.
Also, if I'm looking at it from a seller's perspective, let me take the other side of that coin.
Yeah.
If I'm a seller and I have furniture, fixtures, and equipment that's fully depreciated, I want to keep the sale price of that to a minimal value, because if it's fully depreciated and if I sell those furniture, fixtures, and equipment assets for $50,000, I've got to pick up that $50,000 as ordinary income. Ordinary income is taxed at highest rates, whereas goodwill script value is taxed as taxed as capital gain assets and has a much favorable treatment to it. So there's a pro and con situation depending on whether you're buying or selling this process as far as how to maximize the situation. Also, if you're buying real estate, and let's say you're buying real estate in excess of $500,000, as far as the building is concerned, not land, you might want to take a serious look at doing a cost segregation study too if you're the buyer of that property, in order to maximize your depreciation on that property over a period of time. As Scotty mentioned, goodwill's amortized over 15 years. We talked briefly about the depreciation. You got to be very careful when you buy the assets that you are aware of what the known and unknown liabilities are in that process. That's, again, where you need good legal counsel to make sure that they're checking for all the UCC filings, et cetera, to make sure that you have appropriate disclosure and reps and warranties to protect you in case anything pops up in the process. But there's a lot of aspects here to a pure asset purchase or pure asset sale that have all kinds of both legal and tax ramifications. And again, this is where you need the experts helping you.
And Jeff, let me yep. I'm sorry. Yeah, let me follow up on that. When Alan mentions UCC lien search, when we're buying the inventory, non-inventory assets, computers, OTC, whatever it is, from a pharmacy in an asset purchase, there's always the risk that some vendor out there or some bank or somebody else it's called recording a lien, LIEN, basically has filed something either with the Secretary of State or in the county records that says we have a lien, it's kind of like a mortgage, if you will, against the pharmacy's assets. And so if we don't look that up, and if we don't confirm that such a lien does not exist. Let's say that we go into this thing and we don't order a UCC lien search, we pay a whole bunch of money, and then all of a sudden we find out, wait a second, there's First National Bank out there can repossess all that collateral. That is a part of the due diligence that we need to be careful about. So I just wanted to make sure that we all understood that.
Mm-hmm. And Jeff, I added there on the bottom, exposure to known and unknown liabilities is reduced, because we did have eliminated on there. And I know that wasn't your favorite term, so I put reduced on there.
Yeah, never say never. And it's always, I've learned as an attorney, just never say never. We're not going to bore you with all the details, but let's say that we get engaged in an asset purchase, and this ends up looking like it's called a de facto, D-E, new word, F-A-C-T-O, de facto merger, in which we take over the premises take over the location of the seller, take over the seller's name, take over the seller's bank accounts. We hire the seller's employees, where it just kind of looks like it looks like it's just a pure merger. Then there is a risk. It is a low risk. It's not high. This doesn't happen very often. It's a low risk that somebody could come in and say, well, even though it's an asset purchase, because this looks so much like a merger, then the purchaser is going to be liable for the seller's obligations. That's rare, but that's the reason I like the typical attorney weasel words of as opposed to being absolute.
Yeah, but that just reminded me, something we don't have on these slides, and I've failed to mention when we're discussing this, but related parties, um, how these transactions impact related parties. So father selling to a son, or some kind of related party like that. These tax impacts can certainly change or cause all kinds of issues. So if you're in a related party transaction potentially in the future, you have to be aware of the limitations that you're going to be facing with that. Um, as far as disadvantages, we were discussing new licenses, permits, third-party contracts. So if you're the buyer coming in, you're going to have to get these new licenses, et cetera. You're going to have to apply for them. It can be a lengthy process. Meanwhile, hopefully, that you will be able to um, work under a power of attorney using the seller's numbers, licenses, et cetera. Is that right, Jeff?
That's correct. With an asset purchase in almost all states, um, the purchaser can operate under the seller's pharmacy license and DEA permit until the seller gets its own, and you do that pursuant to a written document called a power of attorney. Um, Now, with a what's interesting though is that doesn't apply. That type of procedure does not apply when it comes to a Medicaid provider number or a Medicare Part B supplier number, and also it doesn't apply when it comes to third-party contracts. The purchaser is going to have to go out and get its own Medicaid provider number or third-party contracts. Um, okay, so it does take a while, but if you get your timing right, where you have a lot of this underway by the time you close on an asset purchase, then it should not be very disruptive.
Yeah, but getting that timing right is extraordinarily critical, as we know. And for those that are entering into lease contracts on properties, sometimes getting that timing right can burn through a lot of working capital while all these approvals take place, especially if you're doing a startup versus a transition. And we see that we see that issue a lot of times with startups, more so than what we're talking about here in this particular webinar here today. But it is something to be mindful of. And while you can certainly use that POA to adjudicate claims, keep in mind that we've seen it take 3 or 4 months up to 2 years, believe it or not, to get all these contracts in place, depending on what state and what locale that you're located in. So this is not something that you snap your fingers and get put in place here, which again leads to the credence of maybe taking a look at the purchase of the common stock as one main advantage here is you don't have to go through that process. And it goes without saying that if you're buying the assets only, you got to retitle the assets, you got to negotiate potentially your key contracts that are in place. There's just a lot of issues to take a look at, including key employment agreements. There's just many issues here, whether you're buying assets or common stock, that really need to be looked at very, very carefully, again, by competent legal counsel.
Mm-hmm. And unfortunately, it's pretty common where you'll see someone buying a pharmacy, buying the assets of a pharmacy, and they've already signed the lease for their new space, and it's going to take them months to get these licenses and everything, and they're stuck with paying a lease, and it could take them a year before they can open the doors to that pharmacy. So
and what you don't understand also, when you sign in that lease, a lot of times you're having to personally guarantee it as well. And even if your venture is not successful, you may have personal risk there that a lot of people don't look into or realize what that risk is until it's too late.
Look at the third bullet here on this slide. The time to decide as to whether or not, if you go back to the previous slide,
sure.
Scott, if you
Yep.
can, the time to decide whether or not we want to keep some of the seller's employees, we need to make that decision before closing, and then we need to tell the seller seller wants our money. And so we say to the seller, listen, here are the employees that we want to keep. These others you let go. This is on you to do that. We don't need that burden of having to deal with employees that we don't want. And let's make that decision before closing, and we will. The seller who wants our money needs to be play the heavy. And one of the things that Alden said about a lease is just as wicked as a promissory note with a bank. And so when we sign a 5-year lease that says we have to pay $5,000 a month, then that's $60,000 a year times 5. That's $300,000 over 5 years. We've essentially signed a $300,000 promissory note. And so think long and hard before signing a lease. That's where you need a good attorney, a good accountant, because you're going to want to build in some protections in the lease. If possible, you want to build in one or more jump outs where you can get out of the lease at certain trigger points. The lessor is going to want a personal guarantee. It'd be nice to avoid that. Usually you can't. So I'll kind of let it drop at that.
Okay.
Jeff, you want to take the power of attorney?
Yeah. At closing, closing is like buying a house. You go to the title company, and when we go to the title company and we're given the deed, we sign a promissory note, so on and so forth. Well, closing, when we purchase a pharmacy, is essentially the same thing. We do it electronically. We don't have to be sitting in the same room. At closing, a bunch of documents are signed. With an asset purchase, we sign an asset purchase agreement, and the seller will sign a bill of sale, and there'll be some other documents. With a stock purchase, the parties will sign a stock purchase agreement, and the seller will sign a stock transfer. And there'll be other closing documents. Well, let's talk about asset. So now we have an asset purchase. We're at closing. Buyer-seller sign an asset purchase agreement. It's about a 25-page document with a bunch of whereases and heretofores in it. And then the seller signs a bill of sale. That's kind of like buying a car. Bill of sale is just a document that says, I, seller, hereby transfer, sign, and convey all of these assets over to the buyer. But also, equally as important, the parties will sign what's called a power of attorney. And all that says is that the purchaser is given the right to continue to operate the pharmacy under the seller's under the seller's pharmacy license and DEA permit until the purchaser gets its own, usually 1 or 2 months later. And so power of attorney is very important. One thing I want to go off script for just a second, spend about 30 seconds on, and that is Alan and Scotty mentioned reps and warranties. Whether you sign an asset purchase agreement or a stock purchase agreement, there's an important provision in there that's entitled representations and warranties, otherwise known as reps and warranties. And that's where the seller makes a number of promises and guarantees. And if I'm the attorney representing the buyer, I want those representations and warranties to be absolute. I want to see this laundry list of sellers saying, I promise, I guarantee, what have you. On the other hand, if I'm the attorney representing the seller, I want those reps and warranties to be kind of wishy-washy. I want them to say, well, to the best of my knowledge, or based on the facts presented to me, I make the following representations. That's kind of a trick of the trade. The other trick of the trade when it comes to signing an asset purchase agreement or a stock purchase agreement is that as the buyer, I want to see, 75 to 80% of the purchase price paid at closing, but I want to hold back a portion of the purchase price so that portion of the purchase price is paid sometime after closing. That way, as a buyer, I've got this pot of gold sitting there that I can tap against in the event that any surprises pop up after closing. On the other hand, if I'm the seller, I want to get as much money as I can at closing. Let's see here. Okay, I think we've covered that slide.
All right. All right, so we've covered asset purchase. Let's go through the stock purchase. And so as we've mentioned here, you're buying the stock of the selling entity. So you're going to be buying the corporation lock, stock, and barrel. Essentially, you're purchasing the corporation as it stands, and that's going to include all the DEA numbers, MPI numbers, federal ID numbers, most of the agreements, contracts, etc. You're buying the whole thing. The next day you walk in and you're the owner of that pharmacy, pretty much. Does that sum it up pretty good there,
That
Jeff?
that sums up nicely. What happens is with a stock purchase, you have a concept called a CHOW, CHOW, or change of ownership, and that is when I buy the stock of Scotty's Pharmacy Inc., then the corporation that I now own, Scotty's Pharmacy Inc., has to give notice to a whole bunch of people, um, state agencies, federal agencies, third-party payors, and others, that there's a new sheriff in town. Scotty's out and Jeff's in. Just be aware of the change of ownership notifications.
And from a tax standpoint for the seller, this is ideal for sellers in most respects because you're going to be getting a long-term capital gain treatment on the sale of your stock, which has preferential tax treatment. So from a seller's perspective, this is ideal in most cases because, again, you're getting that long-term capital rate, which is a preferential tax rate. So sellers are eager to pretty much jump into these stock deals. Now, as far as a buyer is concerned, buying the stock is not necessarily as advantageous because when you're buying the stock, all you own is the stock of the pharmacy. You do not get to do what we did on the when you're buying the assets, which means you're not able to mark the assets to market. In other words, if you paid $100,000 for the equipment, you're not able to mark that equipment to $100,000 and depreciate it, which we alluded to in the asset section is very advantageous from a cash flow standpoint. You're not able to do that under a common stock arrangement. All you get is if you pay $1 million for the stock, you do not see any benefit of that $1 million that you've paid until the day you sell that pharmacy. And that could be, if you're a young buyer, it could be 20, 30 years later down the road. So that's a big disadvantage from a tax standpoint for a buyer. Now, we've kind of talked about the known and unknown liabilities. Again, you're stepping in as the owner of that pharmacy. So anything that's transpired in that pharmacy up until that point that you either know or don't know about is your problem essentially. Is that right, Jeff?
That's correct. Um, so if I Jeff Baird, I now own this piece of paper, and this is a stock certificate for 1,000 shares for Scotty's Pharmacy Inc. That corporation's all mine, and I have it. It's all mine, warts and all. And so the good and the bad. I've taken the third-party contracts. I've not taken the contracts. Rather, the corporation that I bought has the third-party contracts, has the licenses, has a permit, has all that going on. Now, one thing to keep in mind, however, is that I, Jeff Baird, have not personally assumed any liabilities. So in other words, if I purchase the stock of Scotty's Pharmacy Inc. and closing occurs on October 1st, and I find out on October 2nd that way back in April, 6 months earlier, Scotty's Pharmacy Inc. did some crazy things that has now resulted in an investigation by either PBM or by a governmental agency. Well, the corporation that I purchased, Scotty's Pharmacy Inc., is responsible for that. However, Jeff Baird individually, I'm not responsible for that, so therefore my condominium in Aspen is protected. It's those types of situations with a stock purchase that, number one, you want your due diligence to be thorough. Number two, you want to have strong reps and warranties. Number three, you want at least some of the purchase price to be paid after closing, so we have something to tap against in the event that one of these skeletons pop up.
And Jeff, typically how long is that escrow, the seller's money sitting in escrow typically? Is it 3 years, 5 years?
No, it's usually not that long. I normally at least I don't claim to be a transactional attorney. I'd have to talk with our M&A folks, but usually it's about a year.
Yep.
Yeah, about a year normally. And because what's going to happen is if I buy the stock of Scotty's Pharmacy Inc., if no matter how thorough my due diligence was, if things occurred over the last couple of years that result in some type of audit or investigation, then that's going to come to the surface with 12 months after closing.
And I'll remind folks to put your questions in the box here. If you've got any questions, feel free to add those to the box. How about the mechanics here, Jeff, for an asset stock deal?
Absolutely.
Yeah, keeping in mind, Jeff, we've only got about 10 minutes left too, please.
Well, do we need to kind of like shut down now and take questions, or do we actually keep talking?
Well, right now we don't have any questions right now, so we are in the clear.
Okay, sounds
Yep.
good. That tells me that either we're doing a great job or not so much. Okay.
You got a healthcare attorney for free here on the line, so ask all the questions
folks,
you want.
This is the cheapest you're going to get an attorney. You can ask about buying a pharmacy. You can ask about cheap divorces. You can ask about DUIs. So whatever you want to ask me about is fine. It's actually fairly simple in terms of the mechanics, and that is, let's say I want to purchase the assets of Scotty's Pharmacy Inc. Well, the first thing that's going to happen is that my corporation, Jeff's Pharmacy Inc. and Scotty's Pharmacy Inc., the two companies are going to sign a non-disclosure agreement. All that says is that we're going to exchange confidential information. We're going to keep it confidential. That's what it says. Then Scotty's Pharmacy Inc. is going to disclose to me and to my corporation, or LLC, whatever it is, it's going to disclose financial documents, P&Ls, balance sheets, tax returns, whatever my accountant, Sykes and Company, needs to determine how solid, and how financially solid or financially not so solid Scotty's Pharmacy Inc. is. Based on those financials, then I, Jeff's Pharmacy Inc., I'm going to, in consultation with my attorney and with my CPA, I'm going to come up with what I think a fair purchase price is. And I'm going to prepare, or have my attorney prepare, about a 4 or 5 page letter of intent. It's not binding, but it's very detailed. It lays out the terms of the deal, and lays out what the purchase price is and how Jeff's Pharmacy Inc. is going to pay it. We then send that to the seller. And so let's say that so Jeff's Pharmacy Inc. sends the LOI to Scotty's Pharmacy Inc. Scotty likes it. He signs it as president. We're off and running. Now is when we engage in what is called due diligence. And all this means is that my company, Jeff's Pharmacy Inc., I'm going to go kick the tires of Scotty's Pharmacy Inc., and I want to make sure I know what I'm getting. If this is an asset purchase, I can get by with being a bit sloppy because I'm not inheriting any liabilities. On the other hand, if this is a stock purchase, then I'm paranoid. I really want to really do a deep dive and make sure I know what I'm getting. That's the due diligence phase. Now let's assume that after due diligence, Jeff's Pharmacy Inc., I'm pretty happy. I found that everything I've discovered has been pretty much as Scotty represented. I feel good about it. We have closing, and that's like going to the title company. At closing is when we sign all those documents we discussed earlier, asset purchase agreement, bill of sale, so on and so forth. And then before, there are certain contracts and certain leases that can be transferred or assigned. Usually these do not include third-party payor contracts, but it might be a copier lease or a building lease or something like that. Those contracts will be assigned or transferred, usually at closing, maybe shortly after closing.
Mm-hmm.
Those are the mechanics, Scotty.
Appreciate that, Jeff. We do have a couple questions. My friend John here. If you're purchasing a sole proprietorship, can a stock deal be done? No.
No,
Cannot purchase um, stock of a sole proprietorship because all you own is the assets
there is
there
no stock.
individually.
There is no stock. A sole proprietorship is
Right.
nothing. It's if I go out and set up Jeff's taco stand there on the street, that's just Jeff Baird. I own a taco stand. There's no stock. There's no nothing. And so there's nothing if you want to buy my taco stand, there's nothing for you to inherit. Rather, I just say, here's my taco stand, walk away with it. So
Yep.
sole proprietorship, put it this way, here in 2019, you should never, ever, ever have a sole proprietorship. Your business should always be owned by a corporation or an LLC that you in turn own.
Yes, absolutely. We've seen audit rates it's clear the data shows audit rates for sole proprietors is significantly higher. So why even put yourself to that risk when you can avoid it for the most part? Does the buyer, let's see, have you seen an increase in pharmacies selling?
It's steady. I mean, at least from my vantage point, Alan and Scotty, an increase, yeah, maybe, but it's just been steady over the last couple of years, and because what we've seen are a couple of phenomenon. Number one, the aging baby boomers, folks born between 46 and 64, are deciding it's time to retire and go travel, and so they're selling, and we're seeing that. And then we're also seeing entrepreneurs, younger folks and millennials coming in saying, I don't want to work for CVS or Walgreens or Walmart. I want to have my own pharmacy. And so I've not seen any drop off in terms of sales and acquisitions, and I think I've pretty much seen an uptick. But that's from my standpoint, Alan and Scotty. What about from your standpoint?
I would say, Jeff, that we're seeing boomers age out a little further. We are seeing probably a few more sales, but we clearly have more millennials that want to come into the industry because there's so many pharmacy schools out there. And frankly, we're seeing more startups than ever before because there aren't enough stores to be sold where the number of candidates, typically millennial age, have options to buy. So it is still a seller's market. Certain sellers are being pressured by reimbursement rates in certain particular marketplaces, but it is a very active market, as you say, and I know both your firm and our firm is very involved in all kinds of transitions and startup situations in the industry.
Let's see. Another question here. Does the buyer usually get a better price for a stock purchase versus an asset purchase because of the difference in the transaction? And that's a great question. And obviously, the difference between the two, there's a lot of variables that you can use as negotiation tactics, I would say. Certainly, if you're buying the stock, you're not getting any tax benefit. Sure, and the seller is. So certainly, you should be able to hopefully negotiate something in the price for that. But I would say, yes, you should be able to negotiate price advantages one versus the other.
I agree.
Can you talk about the prices of independent pharmacies? Have you noticed a decrease in value due to lower reimbursements or DIR fees? I guess that would be us here.
Yeah.
Let me comment on that, Scotty.
Yeah.
We're seeing DR fees right now, the ones that are properly recorded, being anywhere from 1.8 to 3.5% of gross accrued revenues. So clearly, DR fees are taking that amount of off the bottom line without question. That said, if the average star ratings are close to 5, that rate is typically under 2%. If it's 4 to 4.5, it's on the higher end. Is it impacting the value of pharmacy? To the degree that it impacts earnings before interest, taxes, depreciation, and amortization, which is cash flow, yeah, I guess you could argue that it's clearly impacting the valuation of pharmacies. And obviously the NCPA and others are doing all they can to combat it, but it is clearly in the marketplace and getting everybody's attention at the present time.
Can you transfer the contracts and provider numbers in a sole proprietorship?
No, you can't, because the contracts and numbers are, I'll use the term loosely, are owned, quote unquote, by John Smith, a person, a human being, a warm body. And so the only way to purchase John's pharmacy is through an asset purchase. And with an asset purchase, third-party contracts and licenses cannot be assigned or transferred. Rather, the buyer has to go in and get its own.
Yep. All right, we got a few minutes left here. Good questions. Due diligence. Run through this really quickly here. Let's see if I can find where I am on my slides. So obviously you want to review tax returns. You want to have someone that understands tax returns for pharmacies and how those tax returns correspond to the books and records. Clearly you want to have a deep dive overview of the accounting file, books and records, what's behind those numbers. You don't want to just take a piece of paper and the tax returns and take it as gospel. You have to do some deep dive in there because we have seen a lot of issues and concerns that are missed quite often. So you definitely want to take a quick look at that, or a deep dive look at that. Clearly inventory, you have to understand the inventory. How is that being managed? Is the pharmacy maximizing inventory management, inventory turns? How does that impact the financials from what you're overviewing there on the books and records? Obviously, location and demographic considerations have to be made. You have to work with wholesalers have great resources as far as this is concerned. So you certainly want to take a good look at location and demographic considerations. Clearly, script volume, third-party payers, and top drugs dispense should be analyzed and taken into consideration when you're overviewing the financials as a whole, and to notice trends and what's going on at the pharmacy. You certainly should be taking a look at that. Let's go on to the next one here. We've discussed the third-party contracts. You want to be looking over those leases. The free cash flow is going to come in with the due diligence of the accounting and the tax side of things. You want to make sure that the free cash flow is there to support the purchase of the pharmacy, that the price is what you is a fair price and makes sense. Of course, the consulting or non-compete agreements as needed or needed. And you definitely want to get a business plan and understand your capital and financing needs as it relates to what you're buying and the price you're paying for what you're buying. Is anything else you want to add to that, Jeff?
Yeah. Let me look at the fourth bullet, and this is not. Let me think here. Okay, two things. Whether we are engaging in an asset purchase or a stock purchase, we're going normally we're going to want to lock the seller, the individual, the owner of the selling pharmacy, into a non-compete, so that the last thing we want to do is pay him or her a whole bunch of money and then have that person go and set up a competing pharmacy down the street. And so if I'm buying the assets of Scotty's Pharmacy Inc., then I want to lock both Scotty and his corporation, because he'll continue to own Scotty's Pharmacy Inc. after the acquisition. It'll just be a shell corporation. But I want to lock both of them into a non-compete. If I'm buying the stock of Scotty's Pharmacy Inc., then I now own the corporation, but Scotty's still out there. I want to not lock him into a non-compete. Now, on the other hand, let's forget about transactions. Let's forget about acquisitions for a second. Let's just say that I have my pharmacy, and Scotty is a pharmacist over at Walgreens or CVS, or he's a pharmacist over at XYZ pharmacy chain, and he wants to come work for me. That's great, but let's just make sure that he has not signed a non-compete, because the last thing I want to do is hire Scotty, have him come over and work for me, and then we find out that 3 years earlier he signed a non-compete agreement, and now I get a demand letter from his ex-employer saying, "God, he can't work for you." So just be aware of that.
All right. Jeff, I know
Just
you're an
real
expert
quick here.
here on 336E, 338H10.
I know this stuff inside out. Yeah, I know this stuff inside out, and I'd
Yeah.
be happy to cover this, but I'll let you guys have the practice.
All right, I'll give it a
Let-
go.
let-
Go ahead.
I was just going to say, let us just make those that are potentially interested in buying the common stock aware. There are a couple of different tax treatments where Scotty mentioned earlier, if you buy the common stock, your basis in your common stock, you don't get any benefit until you sell it down the road, and that's absolutely correct. That said, there are some elections here, depending on the type of setup and the type of entities apply, that you can make that are as if you are buying the assets, but you're buying the common stock, and you're able to, this is Jeff's favorite word, mark to market assets to fair market value in order to get accelerated tax benefits. This is a highly complex area. It's something we work with all the time, but I wanted you to be aware of that.
All right. Yes, it can be a valuable tool if it's right and you have the right professionals. Now, on to just quickly on the RX assessment. You know, Sykes Company does provide an RX assessment service, and what we do in this process is we take we take your accounting file, your tax returns, do a deep dive of that information, get you on a video call, a recorded video call, and give you feedback and advisory on what we're seeing on your tax returns, on your accounting files, identify opportunities, concerns, issues, and give you a roadmap of the areas you need to work on or the opportunities we see that you need to take advantage of going forward. So we do offer that service. I just want to push that in there, and that's on our webpage if you go to sykes-cpa.com. That concludes, and Jeff, we appreciate your time, appreciate you joining today. It's always a pleasure to work with you, and thank you again for joining us today.
This was fun. This was fun, and folks, we really appreciate you joining us on the webinar. I'm glad you're working with Alan and Scotty and their team. They're the best, and it was. I really appreciate them allowing me to tag along today. So thanks a lot.
Absolutely, Jeff. I look forward to seeing you at the NCPA convention next month.
You got it.
Okay.
All right.
Thanks.
Have a good day.
Bye-bye.
Take care.
Thank you.
Bye-bye.
Bye-bye.